Hey Joel, ConocoPhillips' Freeport LNG facility was approved last week. What exactly can investors do to approach this situation?
Yeah, definitely. This is the second facility that's approved. You saw Cheniere in 2001 gain approval. So now we're looking at about 3.4 billion cubic feet a day of export capacity that could go online by 2007. And then if you look at Goldman Sachs, this basically reaffirms their view. They've been looking at about 6.8 billion cubic feet. That's what they think long-term will be exported from the United States. And basically they're saying that you need a price of around $5 to be competitive. So that's really the ceiling. You shouldn't see it climb too much more. Otherwise, you'll have to start seeing curbed exportation. So really, if you look at that $5 mark, you have to look over the next few years and then long-term as an investor. And really what you're seeing right now is gas prices at about $4. And then you see the LNG exportation should be coming on in 2015. So you should see some pressure of natural gas prices domestically. However, you're not going to see the price really decrease because a lot of the people moving to oil are drilling at higher margins, so they're not going to switch from oil back to natural gas until you get to that inflection point of about $5 or more. So really, in the short term and long term, you should see the price of natural gas really be in about the mid-4s to pushing that 5, low 5s, and that's really the point that it will stay long term.
And based on that window, what companies do you think investors could really look at as possibly gaining from this $4.5 to $5 window?
Yeah, definitely. I think right now is a great time for long-term investors. And really where I would look is low-cost natural gas producers. Really, these are companies that can produce at $4 and make a nice profit. And I like the low-cost producers that have access to selling their natural gas at the Henry Hub space, because a lot of the export facilities are going to be around that Texas, Louisiana space, which means the Henry Hub is going to be a lot higher than a lot of the other regional price markets. So I really like that. So when you look at that, there's a few companies I really like. Southwestern Energy is one. It's really a well-managed company. They're one of the very low-cost producers, and they have a lot of assets in the Marcellus and the Fayetteville shale. So they have a lot of access to that Henry Hub market. Another one, Ultra Petroleum. I really like them. If you look at their low-cost producer as well, their 2012 total cost was $3. So even at that $4 mark, and if it gets up to that $4.50 to $5, they're making extreme profits. They have great assets. They're trading at a good value right now, so investors could really jump in there. And then if you want one of the other plays, obviously there's always Chesapeake Energy, who's not as low cost of a producer, but they have a lot of natural gas. They're will make profits at about $4.50, and they have a lot of liquids coming on, so that's one of the outside plays as well. However, the two full-time natural gas low-cost producers I really think are great long-term investments.
And then you also hope to see their balance sheet strengthen, because they did suffer some write-downs in 2012
Absolutely.
As natural gas plummeted. So not only will that income statement probably look better, but also the balance sheet, which means great things for the debt markets. So hopefully we get to see these companies grow with the price of gas. Be sure to check more on this on Fool.com and keep fooling on.